What should we expect for the real estate market in Ann Arbor, Michigan in 2022? Well, one thing I know for sure is it's not going to be a normal market because there is no normal anymore. We talk to buyers, sellers, investors, and real estate professionals every day. And based on what we're hearing, here are 8 predictions for the Ann Arbor real estate market for 2022. Prediction number 1, it's going to be a red-hot winter market. Now, normally the winter market is about 12 to 15% of the total year sales. This year, we think it's going to be double that. Buyers and sellers who have been thinking about making a move but have been put off by the pandemic are ready to go, and we expect to see more inventory this year than we've seen in many, or if any, year in the past. The pandemic has delayed buyers and sellers, and we think this is the year they're going to get into action and get into the market. Many sellers we're talking to are already making plans to enter the market in 2022, and they're actively getting their homes ready for sale. If you're planning to shop for a home in Ann Arbor, we really recommend that you get an early start, an extra early start this year, as if you wait till March or April, when the normal buyers really enter the market, you're going to find it super competitive and very difficult to find a home. In fact, a trend we've been seeing is that buyers are coming into the market earlier than ever. These are people that are going to be students or parents of students at the University of Michigan, especially at the medical school. And they're getting these things locked down in advance to really combat this such tight market we're in these days. We're also seeing that the average tenure in a home is starting to drop. Historically, it's run about 6 years, people stayed in their home, and then it steadily rose after the Great Recession up to 10 years, where it's been for several years. And we think this is because there was a shortage of new homes hitting the market, and people were underwater in their homes and just weren't able or seeing a path to buying a new home. We're seeing that change now. In fact, in the last year, the average tenure in a home dropped to 8 years. To me, this indicates pent-up demand for people that are ready to make a move and are now taking action. Prediction number 2, we think that we'll see rising inventory this year finally. We'll see inventory rise slowly at first, and as each new home hits the market, there's buyers on the sideline waiting, and we'll see them come off as quick as they come on. But eventually, we think that more inventory will start to hit, and we'll begin to move into a balanced market towards the end of 2022. So why is this? Well, we're seeing new construction activity finally pick up, although slowed by supply shortages. But there are many, many neighborhoods under construction now, and many more that are in the planning stages that'll be hitting in the next year or so. Because of this, as more homes hit, each home that hits the market frees up an existing home. And before you know it, the market's going to start to shift more towards a balanced market. We are seeing many home sellers whose equity has increased 20-30% over the last couple of years. So last year, for instance, Washtenaw County's average price increased 10.9%. And a seller 2 years ago who was thinking about selling looked at the options and just didn't see enough of a differential between the equity they had in their home and what they could do with it on the buy side. Now that's all changed, and there's a lot of home equity out there that's burning a hole in people's pocket. So we think this is the year that sellers are going to get active, and we're going to finally see that inventory of the move up and move down sellers hit the market. Prediction number 3, we're looking for 5% price appreciation in the Ann Arbor housing market. Again, as I said, 10.9% last year, so 5% is going to feel kind of sluggish compared to that. However, we do feel as inventory starts to hit and interest rates begin to rise, that the market will calm down just a little bit, and we won't see as many multiple offer bidding wars going on, which tends to drive up prices. Price appreciation is something that is very much a location-specific thing and can greatly vary from one neighborhood to another. If you'd like to know how much prices have changed for your home and in your neighborhood, please reach out to us. We'd be happy to do a price analysis for your home and neighborhood to know exactly or near exactly what your home is worth in today's market. Prediction number 4, we're going to see interest rates rise. We're in a rising interest rate environment, and don't expect rates to go down. They're going to go up. Everything is pointing that direction. So we expect, and the experts expect, interest rates to run between 3.5% and 4%. I'm going to say they're going to run 3.7, 3.8 by the end of the year. So we're in the low threes now. We're going to move up, and we're going to continue moving up into 2023. Eventually, we're going to get back to where interest rates are normally, I would say in the 4 to 6% range, which is still totally reasonable. However, as the rates move up, two things are going to happen. It's going to push the lower end buyers out of the market as they just don't have the firepower to buy with price increases and higher monthly payments because of higher interest rates. The other thing we think it'll do is drive demand as buyers want to lock in these low rates. They're finally ready to take action, and the fact that rates are really starting to move is going to push them into the market. Now, I want to just add here, the worst thing you can do is buy a home because the interest rates are low. Always buy a home or any investment, any large asset based on the fundamentals. If it's the time to move, if it's right for your household, if you can afford it and it's in the location you want, meets your needs, then that's the time to buy and that's the house to buy. Prediction number 5, millennials are going to be the largest home buying contingent. They account for 37% of the overall U.S. housing market, and they'll make up even a bigger percentage of first-time home buyers this year. So millennials have had a tough time since the recession. They got beat up in the 2008, 2011 period on housing. They have seen the job market be quite difficult, and then they've had to deal with the pandemic, of course. However, many millennials are now in their prime earning years. They have young families. They're busting out of their houses. They need to make a move now. So we expect to see them in force in the housing market this year. Also, I'll add that rental rates have been rising even faster than housing prices. And if you've looked at rentals in the Ann Arbor market, the price of a 2-bedroom rental apartment or condo is fast approaching $2,000, $2,500. It's completely out of hand. And many millennials who've been renting are seeing the writing that they want to be in a stable environment for their families, and they want to lock in their housing costs for the future, and they're ready to act now. The trend we're also seeing is that many, again, particularly millennials, living in high-cost areas such as California, Colorado, Denver, Colorado, it's been scorching hot in terms of price increases and cost of living. Washington, D.C., New York, these places have gotten extraordinarily expensive. And over the last 2 years, people have been working from home, and finally they got the green light to work remotely permanently. So our phones are ringing with people who are saying, you know what, my family's from the Midwest, I want to get back to a small, manageable city, I want to move to Ann Arbor. Prediction number 6, baby boomers are going to be putting their homes on the market and are ready to make a move. Boomers have been racking up equity. Their home values have increased 10, 20, 30% over the last few years. Their stock market valuations have gone up 10, 20, 30% as well per year. And they have a pile of cash and they are ready to cash in their chips. I talked to a baby boomer, somebody in their 60s to 70s. Kids have grown up, they've left the home, they're married, they have their families, and they're sitting in this 3,000 plus square foot home and just ready to go. So when they start to shop, they look around. 2 years ago, they were seeing that, it's an okay trade-off. But now, with an extra 30% equity in their pocket and maybe a pile of money racking up in the stock market, you think, I ought to sell this house. I can sell this 3,000 square foot house, pick up an 1,800 square foot 3-bedroom condo, have maybe $300K left to fund my retirement account. We finally see the differential starting to be there where boomers can actually make a move, pull out a pile of cash, and do something really great with it. So this is a fundamental difference that we did not have 2 years ago. Additionally, we are seeing new construction hitting the market finally, and many of the builders are building just for this contingent. They're building those 3-bedroom condos with first floor masters, and they're selling them as fast as they can produce them. These folks have been looking at retiring. They're still working. Maybe they've quit their full-time job and have a part-time consulting gig, but they're looking to simplify their life. And if they could pull $300K out, just think of all the things they could do with it. Another thing that baby boomers are really starting to do is to buy investment properties such as an Airbnb or a retirement condo, maybe in a warm place, Florida, Arizona. And by selling their larger family home at a big profit, they can take that cash and make their moves. It's an exciting time right now for them. Another trend we're seeing with boomers that's going to bring inventory to the market is baby boomers own a lot of investment properties. And I speak to people all the time that own these properties, and the biggest issue they have is, what am I going to do with my proceeds after I sell the property? One thing is darn near for certain, and that is that your capital gains taxes are as low now as they're ever going to be. The chances of them going lower is near zero. So many boomers are realizing this and taking their capital gains on increased valuations, paying the taxes, and taking that chunk of cash, and again, funding a retirement account, buying a retirement home, maybe going into a REIT where they don't have active day-to-day management concerns. Prediction number 7, we're going to see continued supply constraints. There's just no question about it. Most of 2022 is going to be hindered by supply side problems. We'll see it in every industry, and housing will be no exception. You can expect your new construction to take longer. It's going to cost more. Hopefully not as bad as we saw during the peak times during the pandemic, but it's still going to take a while to get things back in line, maybe even a couple years. And we're going to see this in home improvements as well. We're seeing shortages of labor, contractors are hard to get, materials are more expensive, and those project prices are a lot higher than they were in the past. If you're thinking of planning a home improvement project, start now and finding and lining up your contractors. They're hard to find and they're booked out. In fact, many contractors I've talked to, particularly the really good ones, they're booked out through 22 and are already booking for 2023. If you're thinking of doing a remodeling project, reach out to us. We maintain a list of vetted contractors who have done great work for our clients, and we're happy to recommend them to you. Prediction number 8. Sorry guys, no foreclosure glut is going to happen. Now there may be a trickle of foreclosures on the market, and really it's the saddest thing that anybody loses their home to foreclosure. But don't wait around thinking you're going to scoop up a great deal on a foreclosure home. It's just not going to happen. The ones that do hit will probably hit the market along with other homes, and they're going to get bid up just like every other property. There's also the chance that many of the foreclosures never see the market, that they get packaged up and sold to large institutional investors, which has become a common thing over the last 10 years as these large institutional companies get into home ownership in the United States. In fact, foreclosures are representing around 1% of all the properties. In fact, foreclosures are representing around 1% of the total property sales. It's almost insignificant. And the Ann Arbor metro area is likely to see a few, but not many. So I have people calling all the time, I want to buy a foreclosure deal. So they think because foreclosure, it's going to be a deal. Again, not the case. Most properties that we see hit the market as foreclosures are going to get bid up just like any other property to the market price. So the best reason to buy a property is because it fits your financial needs, it fits your lifestyle needs. First and foremost, great location, primary consideration. Don't buy a secondhand property or a second-rate property just because it's a foreclosure. In fact, when we have buyers talk to us about buying a home, the first thing we do is just go back to the beginning and take a systematic approach, find out why they want to buy, where they want to buy, and for what reasons, what they can afford, and get way back at the beginning. Many people just come in, I saw this house, I want to buy it, but they really haven't researched the market. We know about neighborhoods that they've probably not even heard of, and we can really dial in on what they want by listening to their needs and then going out and delivering what they want. So if you're a buyer, give us a call. Well, there it is, 8 predictions for 2022. Check back in a few months or a year and see if these actually came to be. So one more little thing here, what could possibly go wrong? And here's a few things that could happen that could derail the housing market. And if the housing market has been one of the best performing sectors in the economy, so if the housing market derails, I'm pretty sure you're going to see the entire economy be in big trouble. But here's what could happen. Obviously, the pandemic could get worse instead of getting better. We are seeing crazy numbers with Omicron, and who knows what's coming next. I like to think we're going the other direction and things are improving. National disasters, we're seeing larger swings in weather. We saw the largest tornado, I think, in history in Kentucky. We're seeing flooding and so forth. We're seeing some big issues with natural disasters. We could see a stock market crash for a reason that we haven't even thought of yet. So any of these things could really derail the housing market. My thinking is that housing is probably one of the best places to put your money if you're doing it for the right reason. It's right for your family, you can afford it, and it just makes sense for all the criteria that you bring to the table. So if you'd like to learn more about how to get into a home early this year, please reach out, give me a call, or check in on my website, piperpartners.com.